Welcome to our deep dive. For those who really want to get into the nitty-gritty of global markets, we've got this fantastic report, Global Markets Week in Review. It's like getting inside the mind of financial expert Bill Cara.
Yeah, it's dense. A lot to unpack, but that's what we're here for.
Exactly. We're calling this one WIRR#3, dated January 26th, 2025, for those following along at home.
Right. This is the stuff they don't tell you on the evening news.
Exactly. So one thing that really jumps out at me is the shadow of, I guess you could call it, Trump 2.0, and how that's impacting basically everything.
Yeah, I mean, that's a theme that runs through pretty much the whole report.
Yeah, and not just the U.S. either. The report dives into Canada and Mexico, the whole potential ripple effect.
Bill Cara really emphasizes those ripple effects. He even uses the term economic disaster, especially when it comes to tariffs.
Yeah, like think about the auto industry. It's all integrated across borders.
Absolutely. Parts crossing back and forth during production. I mean, tariffs could throw a real wrench in the works.
Absolutely. It's not just cars either. The report even brings up things like the electric power grid.
Right. Some U.S. states rely on Canadian power. Any disruption there would be a major headache.
It really highlights just how connected everything is now.
Globalization in action.
Another thing that I found really interesting is, how the U.S. dollar index is this big benchmark?
Right. Everyone watches it.
But get this, Sweden and Switzerland are in it. But China, Mexico, not included.
Yeah, it makes you think, doesn't it? What's the index really measuring?
Right. Like the U.S. is huge in services, not just goods.
Yeah.
And its biggest trading partners. It's complicated.
It's not a simple story, and that's what makes this stuff so fascinating.
Right. Like another example, the report goes deep on the euro to U.S. dollar rate, but then there's this whole thing about the euro dollar, which is like this almost hidden data point for U.S. commercial banks.
Yeah, you got to dig beneath the surface to really understand what's going on.
Absolutely. So let's talk central banks for a minute. They're like this mysterious force, right?
Pulling all the levers behind the scenes.
Exactly. So how do they actually impact us regular folks?
Well, think of it this way. Quantitative easing, QE, it's basically the central bank flooding the market with money.
Okay, and that lowers interest rates.
Right. It encourages borrowing and spending, like hitting the gas on the economy.
So then QT, quantitative tightening, that's slamming on the brakes.
Exactly. They start withdrawing money, rates go up, things slow down. The report emphasizes that the Fed's been doing a lot of tightening recently in 2022 and 2023.
And that directly impacts things like, companies trying to raise capital, right?
Mm-hmm.
Mortgages, that kind of thing.
Absolutely. It ripples through the whole system. And actually, the report even suggests the Fed might have overdone it a bit with the tightening.
Oh, interesting. So now they're trying to soften the landing with like a new phase of QE.
Potentially, yeah. It's a delicate balancing act. Stimulate the economy, but not let inflation get out of control. Investors are definitely on edge about it.
Speaking of things to be on edge about, bond yields and interest rates, right? The report keeps coming back to the 10-year Treasury yield. Why is that so important?
It's a real indicator of how confident investors are in the economy.
Okay, so when yields go up,
that means investors are demanding higher returns for lending money to the government. They're worried about inflation, maybe even economic instability.
Right, and that affects everything. Mortgages, companies borrowing money, everything's tied to it.
Exactly. It's a benchmark that ripples through the entire market.
And I like the analogy in the report, comparing the NYSE Composite Index to a radar gun.
Right. So are other markets speeding or slowing down compared to that benchmark? It helps you visualize things.
Exactly. You can see those relationships. So this week, the report says the 10-year yield was all over the place.
Yeah. Initially, it plunged, which gave the equity market a boost. Then it surged back up again.
A real roller coaster ride.
It shows you how everything's connected. And that volatility, it keeps things interesting.
For sure. And speaking of connections, the report spends a good chunk of time on global markets, not just the U.S. What are some of the key takeaways there, especially given the whole Trump 2.0 uncertainty?
Well, we've already talked about Canada and Mexico, but the report goes deeper into South America, Europe, Asia. Each region's got its own dynamics.
Right, its own opportunities and risks.
Exactly. For example, the report suggests there might be good opportunities in South America, specifically in places like Chile and Peru.
Okay, and why those countries?
They're known for their stable political environments, and their economies are growing. In Europe, the report points to Spain, with its renewable energy sector booming, and the Netherlands, which is a leader in high-tech agriculture and logistics.
It's like each region has its own specialty, its own flavor. What about Asia? Any promising markets there?
The report's a bit cautious on China. Trade tensions, regulatory uncertainties, those are headwinds. But India might be interesting given its economic growth and that expanding middle class.
Makes sense. A lot to consider there. But before we get too far ahead of ourselves, let's circle back to the U.S. Remember that imminent threat warning the report issued back in December.
Yeah, the market dodged a bullet there, at least temporarily.
But now the 10-year Treasury yield is creeping back up. Could that spell trouble?
It's definitely something to keep an eye on. If those yields keep rising, it could set off a chain reaction, maybe even a broader market correction. Companies with lots of debt would be especially vulnerable.
So basically, higher potential returns often come with higher risks.
That's the trade-off.
And as we've seen today, there's a lot to weigh when you're looking at global markets.
It's complex, it's interconnected, and it never stands still.
Exactly, and that's what makes it so fascinating to dive into. Now, when we come back, we'll take that roller coaster ride into the world of commodities. We'll break down those fluctuations and what they might mean for you.
Welcome back. So let's jump into commodities now. Energy, metals, agriculture, all that good stuff.
Yeah, commodities. I always picture those crazy trading floors, people shouting, making hand signals. Is it really like that?
It can get pretty hectic, but there's a logic to it. You'll see the report using terms like bullish and bearish quite a bit.
Right.
So for those who aren't familiar with Wall Street jargon, bullish means we expect prices to go up, like a bull charging ahead.
Okay, makes sense.
And then bearish means we expect prices to go down, like a bear swiping downward.
Gotcha. So looking at energy commodities this week, the report seems pretty bullish. Does that mean I should fill up my gas tank right now?
Well, hold on. Markets are always changing, right?
Mm-hmm.
While the overall trend is bullish, prices did soften towards the end of the week. It's a reminder that even in a bull market, you can have ups and downs.
Volatility. Always keeping things interesting. What about metals? Anything shiny catching your eye?
Gold is definitely still shining. It's holding on to that bullish momentum. People see it as a safe haven asset, especially with all the economic uncertainty going around.
Right, makes sense.
Nickel, on the other hand, is still looking a bit bearish.
So mixed signals in the metals market. What about those everyday things? Like coffee, sugar, cotton. The report calls those softs, right?
Yeah, softs, grains, and meats, they all get grouped together. Overall, I'd say the report is cautiously optimistic. There are some strong areas, but you've got to consider the supply chain issues and then global events, like the war in Ukraine, that's still impacting prices.
Yeah, it's crazy how something happening halfway across the world can affect the price of my morning coffee. Speaking of global interconnectedness, let's shift gears to the equity markets. The report breaks down the performance of the major U.S. indices. The Dow, S&P 500, NASDAQ, and it also mentions this distinction between price-weighted and capitalization-weighted indices. Can you explain that for our listeners?
Sure. So the Dow Jones Industrial Average, for example, is price-weighted, meaning companies with higher share prices have a bigger influence on the index, regardless of their actual market value.
So a company with a $1,000 share price could outweigh a company with a $100 share price, even if the $100 company is actually much bigger overall.
Exactly. But then you have capitalization-weighted indices like the S&P 500, where companies are weighted based on their total market capitalization. That's the total value of all their outstanding shares, so it gives you a more accurate picture of the overall market.
So it seems like the capitalization-weighted indices give you a broader view of the market then.
Generally, yes, they offer a more balanced perspective, but the report emphasizes that both types of indices have their uses and can provide valuable insights into market trends.
Speaking of insights, the report dives into the performance of individual Dow 30 companies, and there are some interesting contrasts there. Anything that stood out to you?
Well, the difference between Apple and Nvidia this week is pretty striking. Apple took a dip, probably due to concerns about demand for their products, while Nvidia is still riding high on that wave of enthusiasm for AI.
It's a classic example of how individual sectors and companies can move differently from the overall market. Now, I want to go beyond the big names and talk about some sectors that don't always get as much attention, like transportation, utilities, real estate. They may not be as flashy as AI or tech, but they're still crucial parts of the economy.
And they're very sensitive to changes in interest rates, political decisions, and global events. The report does a really good job of analyzing each sector and highlighting the key drivers of their performance. For example, transportation is often seen as a leading indicator of economic health. Companies that move goods, they're usually the first to feel the impact of an economic slowdown.
Right, they're on the front line, so to speak. The report mentions that the Dow Jones Transportation Average has been looking a bit weak lately. Is that a cause for concern?
It could be a warning sign for the broader market, yes. And we also have to consider how those potential Trump 2.0 policies could impact these sectors. Tariffs and trade wars can disrupt supply chains, increase costs, create a lot of uncertainty.
Uncertainty seems to be the recurring theme here. Now, I want to talk about some of those exciting areas that are really shaping the future. The report has this special interest deep dive section that focuses on AI and robotics, crypto, and biotech. These are all fast-moving, fascinating areas.
And highly volatile, too. You really need to understand both the opportunities and the risks in these sectors. The report gives some interesting examples of companies in these spaces, like ARK, Autonomous Technology and Robotics ETF for AI and robotics. Then there's Viking Therapeutics and Vigil Neuroscience in the biotech space. And of course, you can't forget about Bitcoin and its wild ride.
It seems like the convergence of AI and robotics is really captivating investors right now. The report even highlights NVIDIA again, this time for their expansion into robotics and manufacturing.
It's an incredible space to watch. We're seeing the development of these incredibly sophisticated systems that can adapt and make decisions in real time. And as sensory technology improves, robots are getting superhuman vision, environmental awareness. It's amazing.
Robots with superhuman vision, it sounds like science fiction, but it's actually happening. Do you think the report is overhyping the potential of AI and robotics, or are we really on the cusp of a technological revolution?
I think it's definitely a revolution in the making. These technologies are going to fundamentally change the way we live and work. The challenge for investors is figuring out which companies will be leading the charge.
Speaking of leading the charge, let's talk about crypto. Bitcoin made a huge comeback this week, surging past $100,000. What's driving that surge?
It's a combination of things. There's anticipation surrounding Trump 2.0's seemingly pro-crypto stance, but it's also about growing institutional interest and the continued development of the crypto ecosystem.
The report specifically mentions the European Central Bank's digital euro as an example of that institutional interest.
Exactly. We're seeing central banks around the world starting to explore digital currencies. That's a sign that crypto is becoming more legitimate and investors are paying attention.
But of course, Bitcoin has a history of dramatic price swings. It's definitely not for the faint of heart. Before we move on to biotech, I wanted to touch on the report's focus on blockchain technology. It's the underlying technology behind crypto, but it seems like it has potential applications far beyond that.
Absolutely. Blockchain has the potential to transform a lot of industries, things like finance, governance, digital assets like NFTs. It's a technology that's worth understanding, whether you're into cryptocurrencies or not.
It's about seeing the bigger picture and understanding how these emerging technologies could have a ripple effect across different areas. Okay, let's move on to biotech, a sector that's always full of potential breakthroughs. What's the outlook there?
The report takes a cautious approach to biotech, warning that a lot of the leading stocks are currently overvalued. But it does highlight a couple of interesting companies to watch, specifically VKTX and VIGL. They're both developing therapies that could be game changers.
It's a sector with high risks and high rewards.
Exactly. Biotech investments are often bets on the future, and it takes time for research and development to pay off. You need to be patient in this sector.
It's about separating the hype from the real potential.
Yeah.
Now, before we wrap up this section, I want to touch on one last point from the report. The difference between a good company and a good stock. Can you elaborate on that?
Sure. It's a critical distinction for investors. You can have a company with solid fundamentals, strong earnings, a healthy balance sheet, innovative products, but its stock might not be a good investment at a particular time. Maybe it's overvalued or market sentiment is negative.
So it's not just about picking good companies, it's about buying them at the right price.
Exactly. It's about understanding the relationship between a company's intrinsic value and its market price. A good stock is one that offers a good risk-reward profile where the potential gains outweigh the potential losses.
A lot to think about there. Well, we've covered a lot of ground in this section, from the roller coaster of commodities to the complexities of equities and the potential revolutions happening in these special interest areas. Now, let's continue our exploration of global markets, looking at specific regions and investment opportunities around the world. So we've really traveled the globe with this report, from the US to Asia, all these markets, all interconnected. What stands out to you as the biggest takeaway this week?
It's hard to ignore the level of uncertainty, right? You've got trade tensions, central banks changing course, geopolitical risks. It's a lot for investors to navigate.
It can feel overwhelming for sure,
Yeah.
but there must be some positives, some opportunities hidden in all this volatility.
Absolutely. There are always opportunities out there. The key is to do your research, understand the risks, and stay informed. And approach it all with a level head. Don't get caught up in the hype.
Right. Have a long-term perspective. That's key. And maybe a bit of Bill Cara's wisdom to guide us. He ends the report with this really thought-provoking question.
Yeah, he asks, we are all traders, but are we also investors or simply traders? It's a good one to ponder.
It really makes you think about your investment philosophy. Are we just chasing quick profits, or are we building something for the long haul?
It's easy to get swept up in the emotions of the market, but that's when you make mistakes. Investing should be about making strategic decisions based on careful analysis, not knee-jerk reactions.
So much of it comes down to psychology, doesn't it? Understanding your own biases and tendencies.
Absolutely. Knowing yourself is as important as knowing the markets. And it's a journey. You're always learning, adapting. Ultimately, it's about making sound decisions that align with your financial goals.
Well said. We hope this deep dive has given our listeners some valuable insights, maybe sparked their curiosity to explore global markets even further. But remember, this is just a starting point. Do your own research, talk to financial professionals, and never forget, investing always carries some level of risk.
That's right. And never stop learning. The financial world is constantly evolving. Those who stay informed, stay adaptable, those are the ones who'll succeed in the long run.
Couldn't agree more. Until next time, happy investing, everyone.